Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, November 5th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. After Friday's session, we had a big wave up where price rallied, and then by the end of the day here, it was right back down, rejecting right into the pivot range for the month. This is a lower value relationship. Pivot range here, pivot range here. After we dropped, price closes below this pivot range for the month. So any push into it normally is rejected, at least at the first time, right? Now, if we come down here and we reject these lows, if we form a higher low or reject these lows, then perhaps this can go bid. And even now, if price were to start pushing through 27.42.5, we could start to see this thing squeeze back up, and this would be a failed rejection. So right now, we got to continue to watch to see how does price behave in this area. Do we see another rejection downward? That's the primary idea. We do have the FOMC meeting this week, November 7th, Wednesday, and that's going to give us another FOMC key level, just like we did on September 26th, on August 1st. This one here is from June 13th, and we even have one from May and March and January. Right, so these are all the key levels here that we've accumulated throughout the year, and look at how cleanly price reacts to these levels throughout the time here, how it goes back and retests them. We're going to get another one Wednesday, and typically what can happen is price can trade in a range. You can find its early range, early Monday or Tuesday, and from there kind of sit in a 3-day range as it heads into Wednesday's announcement. Once that occurs, we could see some decent movement away from that level. So right now, again, the primary idea is to watch for bears to defend for another attempt at new lows. But heading into the FOMC, we could see some sort of range and sideways action develop somewhere, say between 2700 and 2742.5, something like that. So we'll continue to watch this, but again, all eyes on FOMC Wednesday. Here's a look at the NQ. Now when you look at the NQ, you see very similar price action. We have downward trending behavior here. We're at the upper end of the range, into the pivot range. Nice rejection till Friday. Again, that could provide another opportunity to look to new lows below the previous month's low. If there is any failure to reach new lows or rejection of those lows, that could lead to a major squeeze down the road. Right now, all eyes pointing down at the moment. But very similar to the ES, we could see some sideways price action for the next 3 days as we head into FOMC. That could be an early impulse move, though. We could drive down first, drive up next, and then kind of hold. We could drive up first, drive down, and hold. We got to see how the market's going to play out right here. But early on, if there's any rejection here at 70.47, 70.50, that could lead to some major selling pressure down the way, especially if 6,900 is taken out. All right, let's take a look at crude oil. Now, crude is at the best spot in the chart right now for bulls. Bulls have gotten really handled here ever since they took it to the top end of the range. Then, boom, the rug got taken from under them, and then you see these lows right here taken out, and now we've wiped out all of those lows that go all the way back to April, and we are now below those lows at the moment. Here's the key range right here, that key range low to that key range high. We're right there at the moment. Let's zoom in on this. So right here, that low, very important, and that is the 63.41, hiding below all those lines. Up here, you can see that 75.27. Here's your midpoint, 69.34. This was an important midpoint. That was a rejection for us. That was a retest, and that was the target with a shot at getting across the range. Again, we've been watching for failed new highs all the way down for a likely continuation. But once you get to this low down here, there's a major decision point that happens. You either reject those lows and return back up, likely to 69.34 very quickly, or price fails to get back above this low here and then starts a major extension move downward toward the next extensions of 60.44 and 57.47. Now again, The primary idea, typically speaking, is once you've made this huge move all the way across, you're not likely going to see a continuation. It's already made a huge 2 times move here. So it's made a major move. So typically speaking, after a move like that, you find a point of rejection. This LVN is a very good spot to watch, and then you look for a bounce back opportunity back toward the midpoint of that range. That's 69.34. So that's the primary idea this week, to watch for signs of rejection. We're not quite there just yet, but should we find some sort of significant bottom or rejection or major stop run day, that could lead to a nice bounce back towards 69.34. Otherwise, any failure to get back above 63.41 could be very bearish still. All right, let's take a look at gold futures. Gold is down just a hair here this morning, but still looking bullish overall. You can see this has turned into a nice rounded bottom, with 1240 being the major resistance level. All pullbacks have been bought so far. Our 1216s have been bought so far this month to start the month, which was our buy zone. And now we're looking at kind of a big stop run day with a small digestive day here on Friday. Currently trading below the previous session's low. That could offer a failed new low opportunity. So if price starts to pop back above 1231.30, that could provide a nice lift throughout much of the week. Again, the idea is if price can finally get through 1240, it opens up nothing but clear air above to 1287, which is CVPOC. It's about right there, and into 1300. The long-term potential, though, given how long it's developed this pattern now, the long-term potential suggests a move all the way back to 1360 now if price can get above 1240 and hold. We may not be there just yet, but we are looking like we're getting close. We could certainly go sideways a little longer, but the market structure has been on point, and everything still points to a potential move higher. Again, the high probability target would be 1287. But down the road, I'm talking months down the road, say 3 months down the road, 4 months, we could be looking at 1360 again if price can manage to stay above 1240. Lastly, let's take a look at, let's do the YM. Here's the YM. We have a great rejection tail as well. Very similar to how the ES and the NQ look. This one also occurred after bouncing all the way into 27,750. This was also above the previous month's midpoint, and then closed all the way back to the lower portion of the pivot range. Again, we have a nice little digestive day here. The midpoint is still above here at about the 360 zone, 25,360. Again, any pullback into that zone this morning could be a selling opportunity for a push down. So if we start a little higher this morning, it could be quite a bit of weakness, especially if price gets back below 25K. I would imagine, again, with FOMC coming up, any pullback this way could be bought, and we could be looking at some back and forth action. Same thing if it rallies up here, but back and forth as we head into FOMC. We do have a downward bias, but if by the end of the month price closes above this midpoint here, it would change that bias and start to work this much higher. All right, that is it. Let's see how this thing plays out heading into the new week of trading. Good luck, trade well, and I will see you in the trading room. Take care.